Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Capital Southwest CORP quarterly report. Capital Southwest Corporation provides a range of businesses and services including credit and private equity investments, venture capital investments, mezzanine financing later stage, and mature company investments, growth capital investments, buyouts, industry consolidation, recapitalizations, direct lending through unitranche debt, subordinated debt, senior debt, first and second lien debt, and preferred and common equity co-investments, alongside debt investments, syndicated first and second lien term loans in the upper middle market. The company focuses on investing in middle market companies across various industries such as industrial manufacturing and services, value-added distribution, healthcare products and services, business services, specialty chemicals, food and beverage tech-enabled services, and SaaS models, energy services, and products, industrial technologies, specialty chemicals and products. Capital Southwest Corporation typically invests in companies with a minimum EBITDA of $3 million to $25 million, seeking to make investments ranging from $5 million to $75 million. The stock price of Capital Southwest Corp. CSWC has shown no significant changes in the past year despite several news events. The company's earnings reports for fiscal Q2 2026, CONE 2026, and Q4 2025 were met with minimal reactions from investors, with stock prices changing by less than 3.03% each time. Routine announcements such as dividend declarations also did not cause significant movements in the stock price. The stable weekly stock volatility of 3% over the past year suggests that many news items are absorbed within this range, resulting in no significant changes to the stock price. The primary drivers of revenue growth or decline can be summarized into several key points. Revenue growth is primarily driven by net increase in investments at fair value, $92,608, proceeds from sales and repayments of debt investments in portfolio companies, $114,745, net investment income, $1.16, accretive effect of share issuances and repurchases, $0.31. Revenue decline is primarily driven by decreasing credit facilities, $266,000, purchases and originations of investments, $237,711, principal repayments received, $116,483. Net income and profit margins experienced significant changes between 2024 and 2025. Net income increased by $819,000, 2.6%, for the 3 months ended September 30, 2025, and by $3,849,000, 6.4%, for the 6 months ended September 30, 2025. Profit margins also underwent changes. The net investment income margin decreased from 66% in 2024 to 57% in 2025, while the profit margin increased from 10.2% in 2024 to 12.9% in 2025. Income before taxes saw an increase of 8.9%, rising from $61,300,000 to $66,734,000. These changes suggest that despite a decrease in net investment income margin, the company's overall profit margins improved due to increased income before taxes. The company's financial performance indicates a strong ability to generate cash from its core operations. With a net cash provided by operating activities of $123,119 and an overall positive operating cash flow, it is clear that the company is successfully converting profits into liquid assets. This suggests a healthy and sustainable business model, capable of generating sufficient funds to meet its financial obligations and invest in growth opportunities. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, there is a mixed picture. While total debt increased significantly in some periods, page 275, it also decreased due to repayment of credit facilities, page 327. Additionally, unfunded commitments increased from $197.4 million to $342.4 million, page 330. Interest expenses have consistently shown an increase. The interest expense and fees increased by 14.5% for the 3 months ended September 30, 2024 to 2025, page 283, and interest expense has increased significantly. $16,020,000, 2025, versus $12,587,000, 2024, a change of plus 27.3%, page 321. Management is focused on investing in established companies with proven track records of generating revenue and positive cash flow. Their strategy aims to produce attractive risk-adjusted returns through a combination of current income from debt investments and capital appreciation from equity and equity-related investments. To manage risk, they prioritize credit risk by establishing reserves and increasing oversight of vulnerable industries. The company has adequate liquidity to support its near-term capital requirements and will continue to fund investment activities through existing cash and available borrowings. The company has a history of paying dividends to its shareholders. In 2025, the total amount of dividends paid was $104.98 million, with quarterly payments ranging from $33.7 million to $36 million. This indicates that the company prioritizes returning value to its investors through dividend payments. Supply chain disruptions pose concerns for portfolio companies. Our analysis reveals potential risks to the global economy and our portfolio companies due to supply chain disruptions. The impact of these constraints could be significant, affecting not only our companies but also the broader market. Furthermore, changes in trade policies may exacerbate these issues, leading to negative consequences for certain portfolio companies. While there are no indications of inventory buildup concerns, the possibility of supply chain disruptions remains a pressing concern that warrants attention and mitigation strategies. That concludes the financial summary for Capital Southwest CORP. Feel free to comment below, and I will be happy to answer them when possible.